Welcome back to the Investor Professor Podcast. This is Dr. Ryan Peckham, and this is episode 124. On today's episode, we're going to talk about this market mid-January 2024. After a little bit of a rough start, we seem to be back on track, and so we'll discuss that, but we're also going to discuss semiconductors and their importance to the market, our future, your portfolio, and all of that entails. So get your mind right, and let's get to work. Well, welcome back to another episode, everybody. I apologize for not making an episode last week. I haven't been sick in a very, very long time. And man, I just got, 2 trips to urgent care. Thought I had just a severe cold, maybe a man cold, a severe man cold. And then that turned into a full-fledged sinus infection. And, I'm back. I'm sounding a little bit better. I'm sounding a lot better than a couple days ago. I've been teaching for 13 years, 14 years. I've never missed a class for being sick. And this week I got as close probably as I've ever, came before. And so I have an apology to my Thursday economics class, my MBAs. I will be better next week. Oh man, I was struggling. I was really struggling. So what's not struggling though is the market seems to be back on track. And so you look here, you look at the numbers, right? So we had the Dow go above their all-time high already a couple weeks ago from their high from 2021. We now have the S&P 500 this week reaching their all-time high, surpassing their numbers from 2021. And now we're just waiting on the Nasdaq, which is kind of crazy, right? Because a lot of this growth that we've had has been in the semiconductors, which we're going to talk a lot about here in just a minute. And still the Nasdaq composite has not reached its 2021 all-time high, which would have been around December 1st, 2021. It was 15,640, let's call it 645. And right now the Nasdaq's sitting at 15,310. So, this market's going to look a lot different when that Nasdaq hits that new all-time high. And so, for those of you who've been listening for a while, those of you who've been saving money, those of you who've been investing, this is when it's nice, right? We went through the bad times. We kept investing. We thought about the companies we wanted to invest in. We thought about what the future was going to hold. We thought about what are the investment theses that are still going to come out when the market recovers. And we stayed the course, and now we're being rewarded. And if you look at your portfolios, you've probably been rewarded for that. So you look, some of these themes, it doesn't mean that, we're not going to have a pullback at some point. It doesn't mean that you have to chase the market. I think that is what, sometimes gets people in trouble. You start seeing all these headlines about how the market's hitting all-time highs and people feel like they missed it. They feel like, oh man, I missed it. I got to chase it now. And that can be a dangerous place to be. But, for all intensive purposes, normally, so we're getting into earnings season where companies are reporting their earnings, which that's one of the reasons the semiconductors really took off yesterday. But, companies are reporting earnings. Not every company is going to have a great earnings report. They might sell off based on those earnings. So again, it's important to think about the companies that you want to invest in, the companies that you think are going to be great investments over the next 2, 3, 5, 10 years. And if they pull back a little bit, this is your opportunity to get in them. Apple went all the way up to 197. Their market cap was over $3 trillion. They came down on some downgrades that for some reason people don't think that, people are going to use iPhones anymore. And, they came all the way back down to 191. Or sorry, not 191, 181, and now they're back up to, 191. And so there will be some opportunities. There will be some pullbacks on these companies, and you got to be brave and you got to kind of step in there if you really believe in them. Apple, it's interesting. There's a lot more companies that are frustrated with how much they charge for App Store purchases, and that doesn't seem to be going away. Apple's also going to be introducing those new, what are they, goggles? I don't know. That's probably not the right word here. The Apple Vision Pro, which goes on sale. I mean, those are $3,500. And so we'll see what the reaction is to that. The pre-orders, started happening. And so we'll see. I mean, I actually, the reviews I've seen on this have been pretty fantastic. But still, the history of people wanting to wear things on their faces for long periods of time has not been great. So we'll see if Apple can do it better than most companies could. So you look and you see and you look out there, and a lot of the companies that we've talked about on this program, man, are doing so well. You look at Mercado Libre, South American version of Amazon crossed above 1,700 this week. It still has not hit its all-time high. So Mercado Libre's all-time high is 1867, and that was back in 2021. Went all the way down to $600. It's come all the way back up to $1,700, looking great. So some of these, you go look at some of the tech stocks that you know of, that are good companies. Shopify is another one. Shopify is at $80. In 2021, it was $152 a share. So this is why some of these, some of the NASDAQ isn't back to where it was, because things got a little crazy on a lot of companies when we were still thinking about COVID and everybody working from home and all that kind of good stuff, right? So, so there's still some room to run on some of these NASDAQ names that still would be good investments probably for your portfolio. If you're willing to go look at them. So the big news this week was, we talked about earnings season. Banks have already reported earnings. You're gonna have more of the big boys start reporting in the next couple of weeks, and we'll of course go over them. But the big one this week was Taiwan Semiconductor. So Taiwan Semiconductor's symbol is TSM, and this is one of those stocks where it's currently $114 a share. Its all-time high is about $125, but really for the last year, it was really stuck between, let's say, $90 and $100. Taiwan Semiconductor is a very, very important company. They are, their biggest clients are Apple and NVDA. They make basically all the complicated chips that go into an iPhone. But they're also, again, Taiwan Semiconductor, they're stuck in this, political no man's land about, is China going to try to take over Taiwan? All of this political overhang that they have to deal with. And so it scares a lot of investors into investing in that company, even though they're literally the cutting edge semiconductor company on the planet. It just makes a lot of investors, hedge funds, there's just so much you can't, you can analyze the numbers all you want, and the numbers look great, but that political overhang, which we've discussed before, it's hard to account for that. So it makes big time money managers, hedge funds, sovereign funds, all of this big time money, mutual fund, it prevents people from wanting to invest in them or taking that risk. Well, they reported their earnings. They had better revenue, better sales. Their earnings were fantastic. And their guidance was good, even though the macroeconomic data doesn't look that good. And so based on that quarter and how strong that was, well, analysts are looking at that going, geez, if Taiwan Semiconductor's quarter's that good, what are the other quarters going to look like? And so that really pushes up NVIDIA, AMD, all of those type of firms. I mean, it really, gives them a pretty good day. So if you just look at what happened to NVIDIA, I mean, NVIDIA was up 4% yesterday. That's going to be Friday the 19th. They were up almost $24 a share in 5 days. So NVIDIA this past week went from $547 to $594. And that also NVIDIA, Meta came out and said that they're basically going to spend $18 billion buying NVIDIA's chips, that H100 chip that we've discussed. They're going to spend $18 billion this year just buying that one chip. So, and that's one company. That doesn't even include, all the other companies that are going after these chips. And so you have, all of these companies are coming after NVIDIA's chips, but not every company is Meta, Google, Apple. They can't move to the front of the line. Microsoft, they can't move to the front of the line on that for NVIDIA's chips. So that's where AMD comes into play. So AMD, Advanced Micro Devices, company you should know. You go look at them on Friday. They were up 7% yesterday. You look at their week, they went from $146 to $174. Year to date, they've already gone from we'll call it $140 to $174. So AMD, even though their chips aren't, at the caliber of NVIDIA, they're going to basically, hopefully, fill the market from, the companies that can't spend the amount of money that all the big boys can spend. And they're going to be coming down here, and maybe maybe AMD will take kind of that second level market. And so they're working hard on some chips, but even on Friday, their average volume 62 million shares, and on Friday they had 137 million shares trade. So there's a lot of people getting into this trade. There's a lot of people who probably feel like they missed out on NVIDIA, and they're trying to kind of play catch up a little bit with AMD. This will be one that, their quarter is going to be important. Like, this is going to be an important quarter. Not only what they've done, but the guidance that they give. The guidance is going to be so important on what they see happening over the next couple months. AMD, you look at their PE ratio and those kind of things. You look at like some of the financial metrics a lot of analysts look at. They're looking pretty expensive. They're going to have to back this up with some real numbers. Otherwise, people are going to get hurt. And so, it's weird. It's a new year already. And things are changing. We look at some of the companies that haven't done as well. Tesla, right? Tesla. This is kind of a weird stat for you here. This is Tesla's worst start to the year ever. Like, as a stock, this is their worst start to a year ever. They started the year at 250. They're currently at 212. It has been nothing but a slow grade down for them. And, I don't know. I don't know what's going to turn this stock around. The chart looks horrible. I would think that they're very much oversold. But we'll see when their numbers come out if they're still selling cars. And there's a lot of companies that are changing their EV strategy. Ford announced that they're going to slow down on the Ford Lightning production numbers. I know one of the big problems that they reported is that a lot of charging stations that aren't Teslas, that aren't the Tesla superchargers, are just broken, like all over the country, all over the U.S. So they said that 25% of all EV chargers have been reported broken if they're not the Tesla ones. The Tesla ones work. So maybe this actually, if you kind of invert and you think about it from another standpoint, the fact that everybody else is struggling with EVs might actually be long term a good thing for Tesla. But again, they lowered the price of their cars in China, and so as they compete with BYD over there, that seems to be kind of an issue for them. But as they compete with them, as they lower those prices, that lowers their margin, which means that they're not going to be as profitable and not have as much cash. Elon Musk is working on a lot of robots and AI technology within Tesla, and he came out and said that he doesn't feel comfortable doing a lot of this stuff unless he has 25% voting rights within Tesla, which he doesn't have anymore because he had to sell off so much Tesla stock to pay for Twitter/X, and so that whole saga just continues. It's like watching Days of Our Lives or whatever soap opera you want to fill in there. It is literally kind of the same thing. But, you look at this and you look at all these semiconductor stocks. If you want a pure, the ETFs, I know that not everybody listening can always buy just the individual stocks that we talk about. So I want to do a better job this year of kind of giving you some ideas for companies or ETFs that you can own that allow you to get exposure to these. The Nasdaq one that you can always buy is the Invesco QQQ, which follows the Nasdaq. It's $421 a share. I mean, if you look at that thing over 5 years, you look at the max chart. I mean, the top holdings in the Nasdaq QQQ are Apple, Microsoft, Amazon, Meta, NVDA, Tesla, Google, Costco's even in there. Excuse me. So, these are the companies that you're going to want to own. Another one, if you want like a pure play, like semiconductor ETF, there is the iShares Semiconductor ETF, which the name on that is SOXX. So where is that one at? So SOXX is the ETF for the semiconductors. So that is going to be, I'm trying to think of which company that backs that up. Oh, iShares. So iShares SOXX index is one that you can use for semiconductors, and that would hit that. That's going to hit that sector. Just with all the semiconductor stocks. So, but they're not all made the same. I mean, they're not all the same. So you have to be just like everything else. Do your own research, look at the areas that you want to be in. But again, I mean, you look at how this is going to change things over the next couple of years. I've said it on other episodes before if you haven't caught them all, but I always look at, everybody always wants to think about, okay, NVIDIA is selling these chips, AMD selling these chips, but I think about companies that are going to be able to reduce expenses because of this stuff. So I think about companies like McDonald's and companies like that that'll become more profitable as they implement AI because they'll be able to remove some positions. It's a horrible thing to say. People are going to lose their jobs. I mean, there's going to be, but if you look over history, I mean, as we transition, technology gets better. I mean, there are jobs and things that go away. And so I think that'll probably be the case here as well. And so, looking out there, I mean, the stocks are looking pretty good. I'm interested to see how these first quarter earnings reports are going to go. That guidance is going to be important. The macroeconomic data isn't great. So macro is like the country as a whole. As consumers continue to spend less, will the Fed lower rates? March is coming up when they kind of do their big, first Fed meeting. I don't know if they're going to lower rates. I mean, we'll see how the data comes, the next couple months, but I don't know. I know that there's a lot of hope and expectations on them dropping rates. I'm just not sure the data warrants that yet. So we'll have to see. But, you look at, I mean, think about it this way. The S&P 500 is at an all-time high. The Dow Jones is at an all-time high. The Nasdaq's very close, and they haven't even dropped rates yet. So if they drop rates, that means that all the company, the companies that we follow, all of their future profits are now worth more. So when they lower rates, that makes every company more valuable. So if they don't lower rates, or if they do lower rates, you should see the stock market react pretty favorably to that, and we should very much surpass the all-time highs that we should definitely keep going. So, but again, if they lower rates and we have this massive economic activity happen where everybody goes out and buys a house, I mean, I just don't see them, lowering rates too much. So, look at your portfolios, look and see if you have exposure to these kinds of companies. It doesn't mean that you can't invest in other things. It's funny, like Procter & Gamble is going to report earnings this week. This is when you have companies that are growing this much and you have them, rise, NVIDIA is going up this much, AMD is going up this much. It makes it tempting to forget about the boring little engine that could stocks that just continue to do well year over year. when you got like these bottle rockets going off next to your head. And so again, this is where discipline comes into play. It's very, very, very important for you to have exposure to the companies that are changing the world, but it's also very important for you to have exposure to those steady, stalwart, blue chip stocks that are going to continue to do well year over year. Because some of these companies that we talk about in the next couple of weeks, you're going to hear me talk about how the expectations were too big. They moved up way too much into the quarter. They sold off because of the guidance or whatever. Like, we will be having those conversations soon on a couple of these. I can assure you it always happens. And each of the last 3 years, there has been, we've had good Januaries and then we sell off in February and March. So usually based on those earnings and guidance. And so I'm not saying that's going to happen this year, but it's something you have to think about. You have to always be thinking about, okay, never too high, never too low. What are the things I can see in front of me and how can I be disciplined and just kind of stay the course? Okay, so good first episode back. I'm going to do a mini episode. I'm going to tease a mini episode. So I've been reading all these books by Robert Caro. You've heard me talk about him. I've been reading these. He does these books on power. And so I'm going to do a mini episode when I finish the final book of his that I'm reading. I'm going to do a mini episode just on him because I just find it fascinating. It has nothing to do with finance. It's just something I'm interested in on the side. And so it won't interest everybody, but some of y'all I think will find it interesting. So anyways, have a great week. Don't mistake activity for achievement, and I'll see you next time. Thanks, everybody.